So starting trading in 2024, is it the right time to start trading? Am I too late? Even if I want to start trading, but how can I start trading? Well, today in this video, all of your questions will be answered. Just stay tuned and relax. What's up, everybody? So this is your mentor, the one and only legend of indices, Legend Leo. So guys, this is a very interesting video. I'm going to actually be teaching you how to start trading as a beginner. But first, before we start, please make sure that you hit that like button, hit that sub button with that notification bell so that you can get notified every single time the legend uploads. So guys, without a waste of time, let's get started. Let's start. If you want to trade trading as a career, these are the first steps. First 4 steps. These are only the 4 steps that you're going to take for becoming a successful trader. There is a reason why I'm telling you this, because I want you to get into trading knowing what you're getting yourself into and knowing the difficulties that you will face each and every stage. So let's get into it. So the first stage of trading is non-informed excitement stage. And the second stage of trading is informed work stage. The third stage of trading, the hardest one, is the rock bottom stage. And from there, the fourth stage of trading, it's informed excitement stage. Then from there, you get to a successful trading stage. So guys, let me break down these stages one by one. The first stage, it's non-informed excitement stage. This is the stage where you first, like even in anything or even in business, you hear about it, you hear about an opportunity, and you get excited to it. You see people are doing it on social media. They are living like lavish lifestyle. They are living like massive, like they are living a dream. You know, that type of, like when you see those traders on social media, they are living like that life of financial freedom, and you get excited and you want to start your trading. That's the first non-informed excitement stage. So now you move to the second stage, which is informed working stage. So at this stage you decided, okay, I want to start trading, so let me research about it. And when you research, you find out that there's a lot of things that you have to know. There's a lot of things that you do not know. So you start becoming overwhelmed and you see this thing might not be easy as I thought it was, because it now looks difficult, and trading is a very difficult skill to master. I don't want to lie about that. It's a very difficult one. But once you master it, you won't have any financial problem. So at this stage, it's a stage you even doubt yourself that should I continue trying this thing or let me just try it. Let's say you pass through this stage and you go to the rock bottom stage. Now this is the hardest stage ever and the most dangerous stage, because 98% of the people who are doing trading quit at this stage. This is the stage where you feel like you are donating to the market, like every single money that you have, you're just like donating to the market, like your efforts are not paying off. Like you've been working hard on this thing consistent, but you keep on blowing accounts. Now in this stage, this is the very dangerous stage, because now you have done a lot of testings, a lot of different strategies, but none of them seem to work. And you're feeling like you're getting way more less than you're putting your efforts. At this stage, you're even starting to have self-doubts that this thing maybe it's a scam. Like traders, maybe there is something that they do not tell you, that they are not telling you. No, bro, the problem is in you. Now at this stage, if you pass it, That's when now you move to the informed excitement stage. Now this is where things start to get interesting, right? At the informed excitement stage, this is the stage where you start seeing a glimpse of light. You start seeing that light at the end of the tunnel. You're starting making your small profits, your small wins there and there, and you start to realize that this thing is not a get-rich-quick scheme, and you should take it small steps at a time. You should take it step by step by step. And at this stage, you're building yourself slowly. Remember, the fastest way to success is the slow way, right? Then at this stage, you're making your small wins, then you start being excited again with that life that is coming, because now the difference between back then at the non-informed excitement stage, you didn't know what you're getting yourself into, but now the difference is that you know what you are getting yourself into, because now at this stage you start being excited again and start seeing the possibilities. But now at this stage the difference is that you had a plan. You have a plan now at this stage, but back then you didn't have a plan. Now you know exactly what to do to get to that goal. So you end up passing this stage and you go to the last stage, which is the successful trading stage. You will know exactly when you're at this stage. You see, this stage, it's when like trading is just like, for you, it's just like playing a game. Just like everything you touch does simple works, even outside of trading. Because you have suffered and you have learned through the suffer, and you have learned how to prosper on trading. Now at this stage, everything becomes possible. You are an unstoppable force. Like trading is just a game for you. The most important thing, this is just a tip for you, is to also invest in knowledge. Invest in knowledge, guys, because knowledge is the one thing that will make you wealthy. You can watch me, like me, I came from disadvantaged background. I didn't have money to pay courses, to buy signals, any of that stuff. So I had to work on myself, I had to figure out everything for myself. That's why my progress took longer. But now, when you have a mentor is someone who has gone through these stages. He's there to guide you to the right path. Okay, if you're facing this problem, then do it like this. I am too a mentor, and I offer my own trading academy. If you want to know about it, the link is down in the description below, or you can join my free signal group. Also, it's in the link in the description below. And my academy is only 350 rands. You get updated each and every single day. Joining my academy, I offer you everything. I guide you, I mentor you, I offer you signals if you want them there. Courses should be like around 10,000, 7,000. But I decided to form my academy for only 350 rands, $20 to join my academy. And like students there are keep on improving and improving and improving. So guys, that's why I said you should invest in knowledge.
Yes. So first thing first that we need to know about the market. The first thing is the trading sessions, guys. You should know when and not to trade. That's the first thing that I should learn. So guys, I'm going to be teaching you pure price action because that's what I'm using. Currently right now, I'm combining it with CMC, but I started with pure price action. Pure price action is still profitable. Using it alone, still very profitable. Most of the time I use it, but sometimes I combine with the smart money concept. So yeah, but this is all about pure price action. This is the first course that I released, so it's part of the package of our first course. So guys, the forex market can be broken down up into 4 major trading sessions, which is the Sunday session, Tokyo or Asian session, London session, and the New York session. You should know the first thing first, that the market is broken down into what? Into 4 major sessions, as are these sessions that I mentioned before. All right, so let's get moving. You need to verify each session according to your country time zone. So e.g., when they occur. The best time in South Africa is at 9 a.m. up to 6 p.m. So these are the London tradable sessions and the New York session, right? So guys, the difference is that on indices you'll see when on this course the time frame is when you trade currencies, like everything in currency, but on indices you have to enter at a specific time. You will realize why. So guys, let's move to the second section, which that is the forex sessions or trading hours, right? Trading hours. Let's first start from non-tradable hours. So the non-tradable hours are the sentence session started from 12 to 2. Guys, at that time, the South Africa, you should be sleeping at plus 2 GMT. You should be sleeping at that time. And even at the Asian session, it is at 3 to 8. Also at that time, you should be sleeping, right? So guys, the tradable hours. The London session from 9 to 11, right? And the New York session from 2 to 4, right? Now, this was released before actually releasing my major course, which is before actually releasing the latest course. This was actually my first course before I actually even started trading currency, before I even started trading indices. I started trading with currencies. That's why I say I used to mix everything and start why I'm losing on indices a lot, but it's that I didn't know that there is a different time to enter on indices than on currencies. So on indices, right? On indices here, sorry, let me cancel this. So actually, to enter indices here, you can see, let me just highlight, it says 9, right? But now the time to enter indices is not 9, guys. Now on indices we enter at 10 on indices. So you should make sure that you enter at if you analyze very well, enter at 55, 5 minutes before 10. We're actually trading 10. And if you're confident about your setup, check trades on 11 because indices are very volatile. If on 11 we're not happy with the profits or you haven't reached your target yet, then you can put stop loss above entry and then wait for 12. But 12 o'clock, guys, is a deadline. 12 o'clock, you should be out from the market. I'm a scalper trader. I'm going to teach you what I do. So when I realize, I'm going to teach you also about the different type of traders, the day trader, the swing trader, and the scalper trader. So me, I'm a scalper trader. Like naturally, guys, I don't know how to swing. It's not in my nature. I know how to scalp, right? The deadline of closing. It's what? It's 12 o'clock p.m. 12 o'clock p.m. This is the time you should be closing, right? And also here it opens the same, but we enter here at what? At 3:30 on the London session. On the New York session, we enter at 3:30 up to, this is a South African time, guys. You should check on your own time zone. I'm talking about this South African time zone because I'm in South Africa. So at 15:30 to 10 o'clock p.m. right? This is the time you should be entering if you want to trade the New York session, right? Also, there is a difference here. We have something called the DST, which is daylight saving time. If you are doing tourism, you should know what I'm talking about, especially if you're doing tourism at grade 12 current. So this is what's going to happen, guys. If from April to November, right, we enter like this at 3:30, but from November to April there will be a time shift from, now it will be 4:30 it will be 4:30 p.m. to trade US 30, Nasdaq or German 30. 2:11 p.m. if you really want to hold, right, that much. But I won't advise you to hold that much on indices, right? On indices you should be holding, longest time you should hold on indices is actually 4 hours. That should be the maximum holding time, unless you entered at a specific time and you know how to swing, so you can actually swing those trades. So these guys are the time you enter from what, from where, from November to April, and then this is one is for April to November. I hope I'm not confusing you, right? So what difference between a professional trader and a new trader, right? A professional trader only trades 2 to 3 times a day on a London and a New York session. So like me, I realized that the more I trade, the more I make profit and end up losing the profit that I made. So now I only trade 2 times a day. If I win and make profits on the London sessions, then I do not trade the New York. There will be no need to trade the New York session. Someday, if the New York session can also give me like a very, very proper setup that is I'm very confident on, then I enter it. So now, most of the time I enter I only trade once a day. I only take one trade at the London session, or just decide I will just enter at 3:30 on the New York session, right? But now you can also enter both, but you should know that the profit that you made, you could lose them at 3:30, right? So it's all about progress. It's how I check myself and how I say, okay, I make more wins when I do like this. Let's say I trade in the London session. Then if I trade on the London session and I took a loss, then I'm going to come back on the New York session. Then I'm going to recover the loss with profits, right? I could also take a loss also in New York session, but that doesn't mean I'm a bad trader. It was just a bad day. There's nothing as a bad trader, guys. You're an advanced trader, but you're just trying to make it in the market, right? So now let's move to the basics. This, guys, is for beginners. So forex trading, a plan approach. You cannot just trade. That's why, remember when I said earlier, I want first to fix your mindset, right? You cannot trade the market without a plan. You should make a plan first on how to enter, when I'm going to enter, when I'm going to close, why I'm entering. You should always have a plan, because that's what separates you from gamblers being trading to being a career. That's what separates it, those two. Here you enter something that you know that if it goes here, it has to go in a certain direction. So guys, let's get into it. A trading plan is an organized approach to execute a trading system that you have developed based on your market analysis. So a trading plan is an organized approach to execute a trading system that you have developed based on your market analysis. I hope you understand that, right? And let's move to the another part. 4 things that every trading plan must have. You must have skill assessment. Are you ready to trade? Guys, learn before you earn. You should make sure that you should invest in knowledge before you earn. That's what I was saying. Investing in knowledge is very important. The second thing a trading plan must have: set risk levels. How much are you willing to risk on a trade? This, guys, it's part of psychology. If you can master this, that's why I said give yourself 3 months to learn how to trade and 3 months to learn how to master psychology. Then after 6 months, your life can completely change. So that's what I'm saying, guys. Set realistic goals, right? You should set realistic goals. You can't fund 1,000 and expect to make 1 million. What you can expect to make 1,000 rand, 2,000 rand. Then from 2,000 rand, you can expect again to make another 2,000 rand. From 4,000 rand, you can expect now to make 4,000 rand. Those are realistic goals, right? be able to set realistic goals, right? Trade preparation, guys. This is a very important one. Set entry and exit points, guys. You should set where you're going to enter and where you're going to exit a trade. That's part of the trading plan. This must be in your trading plan. I don't know what your trading plan will look like. It's your trading plan that you have developed based on your character, but it will also, it should feature those things. You should all your trading plan should feature these things. Otherwise, because if it's not, doesn't have one of those, man, a trading plan is the worst trading plan we ever had. You won't go anywhere without trading plan, right? So now let's get in deeper to what two types of trading, right? Have a scalping trader, have a swing trader. A swing trader is good for low and medium probability trades, and scalp trading is best for high probability trade. So guys, let me demonstrate to you very quick what I'm talking about. So this is a 4-hour time frame. So this is a 4-hour time frame. You can actually see, let me remove everything here, remove every single thing. You can actually see that. Let me first start to demonstrate with you. Let me demonstrate to you actually how to spot those things. So let's say you are in a bullish trend or an upward trend or an ascending channel. Call this by many ways, right? In the forex market, right? Let's say it's been like this. Let me just zoom it out so that we can see every single thing, right? And the market, it's moving on a bullish market, right? My analysis won't have to be perfect, but I'm just demonstrating to you. I'm just demonstrating to you the nature of the market that can possibly go into, right? We have this, the market has been moving like this. Remember, this is the daily chart, right? If you're a swing trader, you should know you're looking for low probability trades or medium probability trades, right? You should enter where? If you're a swing trader, you're gonna enter here at this point here, because you're at what? You're at a bullish trend. You are learning if you don't know what a bullish trend is. The market is moving in trends, always moving in trends, right? If you're at a bullish trend, right, when it hits your diagonal support, which is this, the diagonal support, this is where you should enter, right? A swing trader can hold a trade for days, even weeks. So this, and then you put your stop loss there. The green side, guys, are my profits, right? And at the end of it, it's my take profit. Then the red side here, it's my stop loss, right? So you should also make a ratio, right? Also make your stop loss to be lower than your profits, right? So that when you hit your stop loss, it takes small money, but when you make profit, you make more money, right? Then you actually could lose, right? So let's say you enter here. A swing trader could hold all this trade for days, even months, to actually hit their target, right? But they will make big money, right? And it wants a big account, because to hold you should have a big account, right? A scalper trader, what you will do? So if I'm a scalper trader, right, and I see this, me as a scalper trader, what I will do, you can see we are moving, we are at a trend inside of a trend, right? There is a small trend inside of a bigger trend, which this small trend, we call it a correction, because it's pushing the market down to just the support, to actually give it the power to push, to touch that big resistance, that big resisting diagonal resistance, or the resisting trend line, right? So what's happening at this point, right? At this point, what's happening is that a scalper trader will enter sells from here, will enter sells from here to this point, right? You trade the entire movement, which means you trade the buys, you trade the sells. You enter here, and then from here you hit your take profit. Then from here you enter buys again. From this point, what am I doing? At this point you enter buys again, and then your take profit is there. So you are trading small movements, but on indices, small movement can actually pay you because they are very volatile. Like, indices are very volatile, right? With this move and also this move, you see, a scalper trader will trade those small moves inside a bigger trend or a bigger channel. So I hope you understand a difference between a scalper trader and a swing trader, right? If you're a scalper trader, don't hold a trade more than a day, right? If you're a swing trader, you hold trades more than a day or even up to months, right? So let's continue with the lesson. Finally, guys, let's get into technical analysis, right? Technical analysis. So guys, technical analysis is based on support and resistance, trends, upward trends, horizontal trend, downward trend. That is the basic powerful tool you need to know in the forex industry, right? That's the basic powerful tool you need to know in the forex industry. So guys, what is this line? This is a supporting trend line because it's supporting the market from actually falling from it, right? And this is the resisting trend line. What does it mean? It keeps the market pushing up, right? This is supporting the market to keep buying, right? When the market goes up, it's buying. When it goes down, it's selling, right? When I'm talking about bullish movement, I mean that the overall movement is buys. You can see the overall movement here, it's been buys. It's been buying. So we call it a bullish movement, right? So from now, this is the bullish movement, right? The market is moving in trends. You can see there is a trend inside of a trend. You can actually see trend lines are very powerful. What do you do about trend lines? Trend lines goes on something called a higher high and a higher low. So let me actually tell you that what I'm talking about. This is a higher high. This is the higher high. And this is a higher low. The market is always moving like that, with the higher highs and the higher low. This is the higher low, this is the higher high, and also this is the higher high again, and also this one too is the higher low. This one is the higher low. So what do we do about this? If we are on an upward trend, then you spot a trend, which means you do what? We sell high, we buy low. This is the higher low, we sell. This is the higher high, we sell high, we buy low. We sell high, we buy low. So guys, let me put this on a practical market, right? So we sell high, we buy low, sell high, buy low, right? Until we break this channel, then you will realize what to do. after, but we'll get into it in just a moment, right? So let me just remove everything. So I hope you see what I've told you here. So let's actually practice this on a real chart, on a live trading chart, right? So you can actually see that the market here has been moving in some sort of like a trend. You can see the market here has been moving in a trend. So what do? We buy low, we sell high, we buy low. See what I'm talking about? This is a trend inside of a trend. So let me put it to line chart so that you can actually see what I'm talking about. See, you see on the line chart, you can see that here we are having a small trend inside of a bigger trend. These are called corrections because that's what they build up the entire movement to actually push, to keep the market pushing. You can actually see even here too. You can actually see, and even here too. You can actually see the market has been buying from lower low, sell high, buy low, sell high, buy low, right? So looking at the market is at an upward trend, right? Which means the buys have momentum. The buys will always be bigger than the sells when you are at an upward trend, right? The buys will have power more than the sells. Look at this area right here, right? See the cells, how small they were. These are the cells. And then I'm going to make buys to look like on a different color. Let me just and these were the buys. Look at how big actually they are. You see how big the buys are than the sells. These were my buys, right? You can just see these are the sells, these are the buys, and then let's get again the sells. See how small the sells are, and then let's get again to the buys. Sorry, let me clone this. See these sells, how small they were, and then now let's look at the buys. Just look currently how the buys are bigger than the sells, because the reason why we're in an upward trend, right? If we were at a downward trend, the sells will be bigger than the buys, right? For example, here when we're at a downward trend, right? And then this was some manipulation, but let's say you see how buys are small and how long the sells are. Buys are small, long the sells, buys are small, long the sells, right? Because we're at a selling channel or we're at a downward trend, right? So let's switch again into the charts, not actually the lines. So we're back again on the charts. You see, so this is how you spot trend lines, right? How to identify a supporting trend line. It should have two touches. The third touch will have to be respected. Like if you can like look at it here, you just remove those demonstrations. Let me just remove those like demonstrations, right? The third touch has to be respected, right? I wouldn't know if this is a trend. We have the first touch here. I'm actually like spot it. We have a first touch. I wouldn't know that I'm in an upward trend, right? Then we'll notice that also here we have a second touch. right? Then what do I wait for? I wait for the third touch. The third touch happened here. And it confirmed with my inverse head and shoulder. You will learn that, and also with my double bottom. You will learn about that very, very, very soon, right? Then on my third touch, when I know, okay, I'm in an upward trend, which means once it touches my supporting resisting trend line. The reason why it's supporting resisting trend line is because, look at it. It's keeping the market from actually going further down. From there, the market reverses. Here, the market reverses. Here, the market reverses. It's keeping the market from actually continuing going down. So, it's a resisting trend line, right? It's a supporting, it's a supporting, not a resisting trend line. It's a supporting trend line. So, at this point, I knew, okay, I had my third touch, which means I'm in a trend. Then when I notice, I look at my second touch also at the top. Okay, I had my first touch here, my second touch here. It means I had to have a third touch. So my take profit is going to be the highest high here, because this is the highest high the market actually held. And then my third touch, I'm going to enter the buys if I'm a swing trade. So I'm going to enter buys here. I would actually enter the buys here, and my take profit will be there. And the market will just go on my direction, hit my take profit, right? So that's the difference. So first, let me teach you about this, how type of trend lines that we have that are actually going to demonstrate, right? So let me just remove every single thing and actually hide the chart. So we have an upward trend, right? Which is the trend, similar trend that we have worked up with. I'm telling you about the things that you're going to be waking up on. An upward trend, right? So this is an upward trend. The market is buying, selling, buying, selling, buying, selling, buying, selling, and buying, right? And the overall direction here is what? It's bullish. What did I say about bullish? When the overall direction is buys, we say it's a bullish market. It means the buyers are stronger than the sells. So I want to actually say our overall direction here is actually bullish. So I don't know if I spelled it right, but yeah, it's actually bullish. So that's our overall direction. It's actually bullish, right? We're in a bullish market, right? And we have a consolidation or a horizontal channel. A consolidation is when the market doesn't decide where it will go. It's just like stuck in a same position. It doesn't show an overall direction. It doesn't show a bullish market, doesn't show a bearish market. It's just like stuck inside of like this rectangle, right? So the market is just like going from here, buying, selling, buying, selling, buying, selling, buying, selling, buying, selling, right? The market doesn't show an overall direction of where it's going, right? We call this a horizontal channel or a consolidation, right? So let me actually type it. We call it a horizontal channel. Right? This is actually our horizontal channel. Then from there we have a bearish channel. A bearish channel is actually the descending channel. It's actually going down, which means sells are stronger than the buys. The overall direction are sells. That's why you say it's a bearish market, right? So you say it's a bearish market. It's when actually the overall direction is actually sells, right? So here We're actually going down. This is a bearish market, right? Let me just type its name too. This is bearish market. So this one is a bearish market. So let's go in a live chart and actually see if we can spot this bullish and bearish market, right? So let me also go and delete everything. So guys, we can actually see from here our overall direction is bullish. You can actually see that the overall direction, it's bullish. Overall direction is buys, which means the buys are stronger than the sells. So we should actually see what type of a trend line does the market, it's the market going it. You can see the market is buying. Right, so which means you're at bullish market. Right, the market is buying. We are at what? A bullish market, right? So let's check for a bearish market. Like here we had a bearish market, the market where the market was selling. This was the bearish market, right? Let's see if can we find some consolidation. Let us see, and let me check on other trading pairs if we could actually find some consolidation. The market here has been bullish. Guys, just like difficult to find a consolidation, but I think I'm gonna use this one. Yeah, I think this is gonna be a perfect example of a consolidation. You can see here, actually here, the market was actually at this point stuck in the same direction. They didn't show an overall direction. Sorry about that. It didn't show an overall direction. It was just like buying, selling, buying. Actually we broke and then started shooting to the top, right? So this area was a consolidation, right? Or a horizontal channel. This was actually our horizontal channel. This was our horizontal channel. So without a waste of time, let's remove everything. And I hope you understand the horizontal channel and the actual bearish market. Now let's look for a bearish market. You can actually see the market from this point to this point. It has been bearish. So we want to push into a 1 hour time frame, and actually you can see it clearly. Yep, I see those cells. So you can actually see the market from this point to that point had been on a bearish market, had been selling, which means the sells are stronger than what? Than the buys. You can actually see here the market, the buys are small while the sells are big. Buys are small but the sells are big. Then we broke, then we finally took up, we shoot straight to the top, right? So that's how it is, guys. That's how it is. So now we're gonna move to support and resistance. You see, guys, if you can just take notes of what I'm telling you here and apply all of it, you're gonna be super far. You're gonna be like really far, right? Because all strategies are based on this. All strategies are based on support, resistance, trend lines, zones, like all of it. Then you can just like add few things such as like patterns, right? So we have something called the support, and we have a resistance, right? So the support is actually supporting the market from actually going further down. So it's like our floor. Then we have our resistance, which means it's resisting the market from actually pushing where? Further up, which means it's our ceiling, right? So now what will happen is that the market will be moving like this, which means we sell at a resistance, we buy at a support, sell at a resistance, buy at a support, sell at a resistance, buy at a support, sell at a resistance, buy at a support. The market will be moving like this until we finally break the support. Then we would wait for the retest, then a continuation to the bottom side, right? So this is our support. And actually this is our support. Let me increase the size of it. Let me increase it to 20. Yeah, amazing. So this is our support and this is our resistance. Here, it's our resistance. I'm going to increase the size of it too. I say this is our resistance. It's resisting the market. So what do? We buy the support, we sell the resistance. Unless we break, then have a retest, then a continuations. What does that mean? How does that mean if you break? So guys, if we break, right, which means now if we break the support is no longer a support. It's now a resistance. Yeah, I hope you're not confused. If we break it, the support is no longer our support, is a resistance. So we should wait for the market to come and touch it, which means I call this a retest. We should wait for the market to actually retest it, to test our new resistance. Alright, so now we call it what? Our resistance. It's no longer a support now. It's our resistance. I'm gonna actually make it very big, this one. Now it's long, it's our resistance, right? Where we should spot our next support, which means when the market now it's here, the only thing it can do is if it comes back, there we go, it will form another support, right? So now the market breaks, it's no longer resistance, it's our support. So now you should notice exactly on what the market will do next. So let me just also like remove, like do like a simple one. So we buy, sell, buy, sell, break, retest. You know, now the market is forming a new thing here. Then we push down, retest, came back. I hope you're understanding what I'm trying to say. So now where the market turns, it becomes our current support. Now this is our current support. Now this one was a support, but we broke it. It became a resistance because we retested it, we entered sales, and our take profit was here at our lowest low, at our current lowest low. So now since the market turned there, it came back here, which means here the chances that it can turn too. So that means now this becomes a support, which means this here becomes what? A support. Right, it becomes a support, right? If we break to here, wait for the retest for the market to touch here, then when now it touches here, it will be our take profit, which means here at this point it's our current lowest low, which means now it's our what? It's our support. So now this will change from being a support to being a resistance again. It will change from being a support to being a resistance, right? And then here it will be our support. So that's how the market works. And if you can combine everything, you can actually see now it's starting to form a slow downward trend. If you can actually see, that's how everything comes together. You can actually see now it's starting to form a slow downward trend. The market always moves like this, right? So now this is not a strategy, guys. These are just the basics, right? It's not a strategy yet, just the basics of what you should apply on the market, right? So let's apply it on a real live chart, the support and resistance. So here I'm at this chart, so I should look where is my support and where is my resistance. So let me see if this one was my support. This one, no, let me leave this chart. Let me leave this one too. Also this one too. Let me leave this one. I'm trying to look for you guys as simplest chart, the one that is not complicated, and the one that you will understand of what I'm talking about. So yep, I think here we have a beautiful support and resistance. Let me just check you, German 30. If don't we have a support and a resistance? Yeah, I think we have it here. So this, I will actually see if it's an actual support. Yeah, it's a support. So this was our support here, and this was our resistance, right? So the market, you can actually see what it did. It went up, touched our resistance, came back to our support, touched, went back, reversed the resistance, came again, touched, it failed, but it kept touching. Then we broke. I said, wait for a retest. There, it hadn't touched yet, so it came back to actually retest it. Then our lowest low will be what? Will be our support. Then that's when the market decided to change. We broke again, so the market decided to continue. Then we break the highest high, so it came back to retest, actually continue. You can actually see this was an actual retest of this support, right? So that's how the market works, right? That's how the market works. We can actually see here, this was some kind of like a resistance and a support of somehow in the past, right? Of somewhere, somehow in what? In the past. You can actually see here it was a resistance. We broke, retested it, pushed to the top. Then we form another one. Here we broke again, we came back to it. Then we pushed it again to the top. So I hope, guys, you understand what I'm trying to tell you here. I hope you understand the support and resistance. It's not as easy as like you're drawing it when you're like, you have to find it on a active chart. So you have to have a skill. You have to practice it over and over to actually like find those support and resistance. So that's how easy it is. I hope you understand support and resistance. Now let's get into zones. This is 1 hour time frame, guys. You can actually see this is 1 hour time frame, right? So I'm going to go to 1 week time frame. On a weekly time frame, the thing that we call support and resistance becomes zones. On a weekly time frame and a daily time frame, those things that we are calling support and resistance become zones because they are the most sensitive ones. Let me just remove everything and actually tell you how to. And zones are the ones that are most likely to be respected, are the ones that the market will respect the most, because they are zones. They are very powerful, right? How do you spot zones? So zones, you spot it on a weekly time frame and daily time frame where the market touched and it reversed, or where it had many reversals, or when it had many reversals. Now you can actually see here the market touched and reversed. So which means here too the market had to touch and reverse. Remember guys, this is weekly time frame. On a daily time frame, if you're a scalper trader, this could be like your massive profits this candle. Remember, this is the highest time frame ever, right? This is a zone. Let me actually cater for this zone. This is our zone. You can actually see the zone that got respected here, touched, the market reversed. When it came here, it had to reverse too. When we broke it, we had to retest it, then continue to the top, right? This also is our another zone. When the market touched, you can see the wick, it touched there, then it reversed. You can actually see the market touched there, then it reversed, then it continued to push to the top, then it continues up until now, right? And also here we have our zone. See the market here touched, pushed to the top, then when it came back, it had a rejection, which means this is a candle rejection. The candle rejected. It's like a candle had a wick. You know those wicks, those candle wicks, those wicks, these are the wicks. Once you have a wick, you should know, okay, this was a rejection, right? And the market, it came back again to touch here. So now I know we had to push to the top. So that's how, and here the market reversed. And current, where the market could reverse next is here, right? These are my zones. So then go to the daily time frame and actually see more of those zones. You can actually see now our zones, that this one was a zone, acted as a support, but it's also our zone, right? And this was our resistance. Guess what? We broke it, came back, the retest. Now we are pushing down, right? Now we are actually pushing down. These are my zones at this chart. All right, let me look for more zones where we have a sensitive area. Let me go to a line chart so that I can actually see this thing that I'm talking about. So I'm looking for where we had most sensitive areas, where the market touched, the market reversed the most here. This is another sensitive area. You can see the market reversed here, pushed back down, then came back, reversed again, then it broke, retested, it respecting this area, it reversed again. So now this is our zone. So anytime now we have the market that can come back here, you know that the market will have to reverse here, at least to this zone. The market is moving from zone to zone. You should know that. Even if it's going an upward trend, but it's going to go from zone to zone. And also here we have another zone here, because you can actually see the market reversed. So it's, and it should like, this sold so bad, right? This sold so bad, which means this is the strongest area. So we have to come respect it here again, and when we touch here, we have to respect it. See how the buys it created the biggest buys ever, right? You can actually see these were the zones, right? These are the zones that were respected. So the market, that's why I say it moves zone to zone. From this zone, you should have entered, my take profit, you should be there, entered, hit your take profit, up, back again to this zone, okay? Enter buys from that zone to that zone, then you buy it, those buys. When you come back here, a broke, wait for the retest, then you know the market should shoot from that zone to this zone. The market is moving zone to zone, and from this zone, clear your sales to this zone, right? Then from here to there, enter the buys again from that zone to this zone. Once you break through this zone, wait for the retest, but it didn't happen. But it broke another zone. Waited for the retest from this zone. Then this would be our highest high. This would be our zone. So it means from this zone to that zone, right? If you can understand that the market is moving zone to zone, you're gonna actually be dangerous on the market. You know, congratulations to yourself if you stayed tuned on the video up until this point, which means you are very serious about your trading career.